Hello, crypto cats. My name is Tom. I'm the crypto investor, and it's time for the weekly market roundup. As ever, we start with a heat map of the top 100 tokens in crypto, and you can see that. I mean, it is green, but it's not it's not much of a recovery yet. ETH is on 1,767 parity for the week. Really, Bitcoin is 3% up. It was a fair bit more, but it has given back those gains. The likes of Solana down 10%, Cardano up 22%. But you know, we're treading water somewhat in the markets at the moment. I'm not sure why Wave as a blockchain is up so much. Worth looking into that. But jumping into the chains, so you can see that, of course, since Luna capitulated, we have seen the market share considerably increase for other chains. So ETH is now back up to 64% of the total market. But you've got this new entrant here up number 3, Tron, which has increased its TVL 26% in the last month. And I don't trust it, but this is to do with their stable coin. So it's just worth understanding what's going on. So they have their new algorithmic stablecoin. I mean, Justin Sun has launched this at the most ridiculous time. It's an algorithmic stablecoin that pays 20%. Does that sound familiar? Yeah. So USDD has increased in total market cap by 634% in the last month and is giving Tron some kind of purpose as a blockchain. So yeah, it feels like more sketchiness, more shit to blow up, really, to be honest. And then looking at DeFi, where is it? I've lost it. Maybe it was overview here. Yeah, and then looking at the total value locked in at different DeFi protocols, Maker still sitting at number 1. Curve is, I mean, adding 3% on a weekly basis. For me, this is one of the tokens I'm going to be accumulating over the bear market. As we know, you know, or bear market if you have to drown your sorrows. The time to realize money is during the bull market, the time to make money is the bear market. And what we do now, as much as I just want to kind of curl into a ball and not look at crypto, it's now, over the next year or two, is where you actually make money. It's planting those seeds now. So Curve is one of those tokens that I will be accumulating over the next couple of years to build up a position in. You know, it has real yields, not Ponzi yields. So this is, yeah, one that I'm continuing to look at and add to. Okay, jumping into news pieces. So this week really has been about companies tightening their belts. So Coinbase, it was fairly scandalously, they rescinded accepted job offers and basically said, yeah, we changed our mind, I'm sorry. You also had Elon saying that he wants to cut 10% of Tesla's jobs. You had Gemini cutting back and laying off staff as well. You know, whether this, we don't know how bad things are going to get, but we know that many companies out there are taking measures to increase their runway and to give them as much opportunity to survive should we go into a lengthening recession or bear market. The macroeconomic outlook is concerning, and I think Russia is quite happy, not saying it's all to do with Russia, but a big part of it, of course, is Russia invasion of Ukraine pushing up commodity prices. And I think it's somewhat of an intentional move to really ratchet up the heat. You know, a long war was intended. And so, yeah, I deviate from crypto, but it's possible that we feel the pain for a while, and these companies are all showing that and preparing accordingly. All right. Anyway, this week was the Optimism airdrop. If you didn't get any, I'm sorry. It's worth doing things, of course, now to make sure that you get future airdrops. So if you did receive some OP, I did dump 85% of my OP on receipts as a governance token. I'm not so excited about it. And I'll talk about in a minute other things you can do to help qualify for airdrops. What's interesting on the back of this, of course, is that Optimism is, layer 2s that sit on top of Ethereum are basically renting Ethereum for their security. So we know Ethereum is slow and cumbersome, but it's the most secure blockchain. And these more nimble L2s sit on top of it and rent Ethereum security. So this is the amounts that they're effectively paying on a daily basis for that rent. And a nice way of putting it was this. You can see like Ethereum is that security core, and then these L2s are what wrap around it and sits on top of it, and then Web3 is everything that sits on top of that, all the different protocols that run there. So hopefully that kind of helps to clarify the whole space to anyone who's a little confused. If you do like the content, press like, by the way, and comment. It's much appreciated. Kanye is, he said that he wasn't into NFTs. He's now minting a range of NFTs. He's a huge influencer. If we needed other people to be extolling the virtues of crypto, then Kanye is a good person to have out there. I was saying about how to increase your chances of qualifying for airdrops. So I mentioned this last week. One of the things I did was I bought this NFT. This, pulled together are being sued, and to help pay for their litigation costs, they've released a load of NFTs. Anyone that gets this NFT, I feel pretty confident that other DeFi protocols will be like, what do we want to differentiate the people that receive our airdrop? Okay, let's go for some altruism. Let's go for people that clearly are looking to help support this whole ecosystem. Let's see who helped support pull together when they're in a time of need. Anyone who's got the NFT may well get an airdrop. It's completely speculative, but these are the kind of things you want to be considering. This was a really good article from Z Prime. So this is the VC investment firm that Fiscantes and a number of other people are part of. Their last one of these was all about Pocket. These guys do their due diligence and they know their shit. And I know that the token price of Pocket has been appalling, but there's many big players out there who are extremely bullish on it. It's just the economics of the token have been appalling. Anyway, if you still trust them, if you still believe in what they're doing, one of the reasons I really like Pocket and I went for it is that I like the idea of swimming upriver away from the specific L1s. You don't have to be right about which chain succeeds or what DeFi protocol succeeds. I just want to invest on Web3 ecosystem, the whole space. And so this, and I'll put a link below, this article is all about the middleware, which can support the whole of Web3. So I look at Pocket as part of that piece. They did a whole thing on that, so they haven't included it here, as they mentioned at the beginning. But these are all other protocols that will provide the middleware stack towards a Web3 future. Now, it is well over my head from a text perspective, but yeah, read it for yourselves. I'm particularly interested in things like Quill and Ceramic and the data model section. I don't know of anything in this. There's only a few that I know here, like Arweave and Filecoin, and I think it's at the Graph. But otherwise, yeah, this interests me. All of the supporting infrastructure. It's like buying the utilities. Your oil and gas and water rather than the businesses that sit on top of them. So, yeah, what is it? Is that anyway? Okay, and so yeah, I would check these out. Link below in the article. Talking about Pocket, they have released a number of economic strategies to curb inflation to try to shore up the token price. So the token price is getting to a point where it's a little concerning because it costs as much to run a node as the Pocket that one receives for running a node. And if, of course, it's economically favorable to run a node, then you could get waterfall selling of and unstaking of nodes. And so the team are frantically putting new economic proposals out there to try to stable up the token price. And this one looks particularly. This is basically a stopgap before future ones, but there's a number of things that they're working on. The big one, of course, will be paying customers. Will actually be all of the blockchains that use Pocket having to buy Pocket and burn Pocket to run their relays on there. But right now we're in this kind of freemium model, like Uber when it started out, building the network effect before actually charging the appropriate amount for the product. So one of the other options that they will be doing is this kind of consolidated node solution where you'll be able to have effectively 10 nodes running in one, which means the cost of running nodes is going to go down quite considerably, maybe up to 90% reduction in cost. We've also seen the inflation going down significantly. So you get less and less now for running a node. So the selling pressure should be going down and down and down. Are we going to see the bottom? One would hope so with all these measures coming into place. But it also obviously is going to depend much more on the broader crypto the crypto price of Bitcoin as such anyway. All right, goodness me, words. So I wanted to share this. When I'm not doing crypto, I run Desert Island Survival Experiences. We just were on this channel, Cara and Nate. This video got 2 million views so far. We just had 800 people join our mailing list, waiting list. Yeah, check it out. Cara and Nate, Desert Island Survival. You can watch this twat telling them how to survive on desert islands. Thought you might be interested. All right, good stuff. So the Nasdaq had a fantastic week last week. It was up until the end of the week. It has given back its gains a little bit, yeah, we will see. Maybe it's consolidating sideways, getting ready for another leg up. There's an argument to say we have a bit of a flag formation, but a break here of the Nas could see us come and retest those lows. Interestingly, I'll show you in a minute. So Bitcoin did rally earlier in the week. We got as high as 32,000, only to give back those gains and to form a shooting star, which is somewhat bearish. It is, as I said, just up on the week, but at one point it was 10% up on the week. Still holding above this critical 28,500 line. I don't know, it feels like at some point, if we do get further selling in the equity markets, then I think this is probably going to break. And we have a lot of support below. So we have the previous high of 19,000. We have the 200-day moving average of 22,000. So as I've said before, dollar cost averaging in feels like the best approach to me. It could just be that we're sideways back and forth here for the next 2 years. You have to prepare yourself for that. And so just choosing your favorite projects and tokens and dollar cost averaging into them is really the way to go, in my opinion. One of those favorite tokens, of course, being Ethereum for me, looking to have its 9th red week in a row. I think it never done more than 7. It's now looking at the 9th one. We will see what happens on Sunday. Again, just holding above this critical line. The more it tests this line, of course, the more chance that it fails as sell orders get chewed up or buy orders get chewed up. So we will see if this can hold, but yeah. Otherwise, 1400 or the 200-day moving average at 1200 are likely targets there. I would say that, again, if the equity markets can recover, then all likelihood we will probably see, I'm trying to find my drawing icon, we will probably see, I can't find it, something like this. We'll probably go back and forth in here and then see a break to the upside, maybe before that fades down and tests again. But the chances are this is a much more robust resistance line compared to this one. So I would say that over the next couple of weeks, we may consolidate in here and then get a break to the upside, depending on the broader macro environment. Looking at the ratio between Ethereum and Bitcoin, continues to be pretty bearish for Ethereum. There's talk of the merge taking longer. We're still all eyes on September, but there's not really bullish definitive clarity that the merge is coming definitely in September. And we lost this trend line, which had held for an awful long time. And so, yeah, we will see. I think for me, I expect 0.057 to hold. I think more likely we consolidate in here. We get, the merge should happen here in September. So you just have to think on these timeframes. And then once that merge happens, I would be surprised if we don't start to break to the upside as Ethereum becomes deflationary. Looking at ETH versus the Nasdaq, continues to hemorrhage as well. Likely comes down further. All right, so Optimism tokens, I did dump mine mostly around the 1.7 mark. It's stabilized as a token. We will see where it goes. This is the total market cap of all of crypto combined, divided by the S&P 500, and you can see that we have held this trend line really since back in 2015, and only closed. We had that liquidity event where we closed above below it once, but as I said, I discount that liquidity event. But we look to have lost it, which is also another nasty sign. We're coming back to retest the high ratio that we achieved back in 2018, 2017. If that breaks again, if you think about how companies are acting to get their cash reserves higher, to build their runways, to become leaner, um, it means less interest in high risk assets, and that's what this is. It's a movement away from high risk assets. I'll come back to crypto in a second, but I wanted to talk about what that looks like from an equities perspective. So this is an ETF of value companies. So value companies are your vanilla businesses from I don't know, Ford, AT&T, companies that are just dividend companies that don't necessarily have really huge growth ahead of them, but they have good cash flow and they make money on a daily, on a kind of stable metronomic basis. So value, what crashed? Value continues to look very nice. And that the opposite of that would be something like ARK, which is Cathie Wood's growth fund, which obviously went into hyperdrive post COVID and has given back all of those gains and is now kind of bouncing off that same pre-COVID level, which is incredible to see such a jump and sell off. So it did 355% growth and has given back all of those gains. So what we can do is divide value by by growth, and you can see that value had been losing out to growth over the past 4 or 5 years. It was down 80%, only to see this massive jump of 240% in value stocks versus growth stocks. And so you could classify, the reason I'm talking about this is you could classify crypto as growth. It's highly speculative, emergent asset class. You're betting on the future. We know this stuff's coming. We just don't know when. And so, yeah, you have to think of your asset class very similar to ARK. And it's quite amazing, really, that the likes of Bitcoin and Ethereum are holding up better than Cathie Wood's equity fund of growth stocks. All right, jumping back to crypto. So I just want to look at the dominance. So we looked at the ratio. You can see that the Bitcoin dominance is just coming up to 47%. So this 47, 48% is a line in the sand, which we have not been above since back in May 2021. It's come up and tested this. So this, we will see. There's a good chance perhaps that Bitcoin does take this out and continues to gain in strength. People are obviously favoring that safe haven. And all of this will come down to the monetary policy of the Fed. We don't know if they're going to have to keep printing money to ensure that the lights stay turned on for poorer individuals in society. We could see oil prices at $170, $190 a barrel. We could really see huge economic pressure put on the populace. And so if that happens, of course, we're going to have a further devalued dollar, and the likes of Bitcoin as a safe haven asset to protect one from currency devaluation would be the way to go. ETH dominance continues. Well, it's coming into significant support here at 17.6. A break here, and we could easily come down to 15.5. One hopes that it will hold here. You would say historically this is a really good time to be looking to flip some Bitcoin into Ethereum, but it depends on that macro outlook. Okay, I think that is it for now, Crypto Cats. I hope you're doing very well, and that's it. I'll speak to you soon. All the best.